Landlords exiting the market. So, I want to spend some time talking about, first of all, why so many landlords right now are exiting the market. And then, secondly, talk about the different strategies and the different ways that landlords can actually offload their rental property. So, first of all, why are landlords selling at the moment? Well, it's for a variety of different reasons. So, number one, we've got the Renters' Rights Bill. We've got new legislation coming our way. The Renters' Rights Bill is going to shortly be implemented, and this is going to change quite a lot of what we do as landlords. And quite a lot of landlords don't like change. Let's be honest, a lot of people don't like change. The way we serve notice is going to change. The the length of tenancy is going to change. The security, the way we implement rent increases, and perhaps how well. First of all, how often we can increase the rent, and secondly, by how much we can actually increase the rent by is going to change as well. So, quite a lot of landlords perhaps who've based their business based on the legislation that's been around, for many, many years, things are going to change. Maybe this doesn't work for those landlords. So that's one reason why landlords are selling right now. Now, the second reason is that quite a lot of people bought buy-to-let property. It was very popular. There was a real boom back in the 80s and 90s of buying buy-to-let property. So a lot of those landlords who perhaps took fixed term mortgages, they're all coming to the end of their fixed term at the moment. So a lot of landlords are seeing this as an opportunity to cash out. Thirdly, interest rates are high at the moment compared to the way they have been over the last few years. Now, obviously, medium and long term interest rates are fairly normal right now, but a lot of landlords who perhaps bought 5, 6, 7 years ago, interest rates are high. And again, perhaps the calculations that they did when they bought their buy-to-let property, their business plan that they did at the beginning, they didn't expect the mortgage amounts to be this much, because the interest rates have gone up. Um, Now, the other reason is that landlords haven't increased their rent, and again, they're not making enough profit. Now, something I hear quite often is that a landlord perhaps hasn't put the rent up in 3, 4, 5, 6, 7, or even as much as 10 years. Because, well, first of all, if you've got a letting agent managing the tenancy, that the letting agent hasn't increased the rent, I'm really shocked to hear that quite a lot of letting agents don't increase the rent unless the landlord requests it. So that could be one reason. Uh, the other reason is for any self-managing landlords out there is that the landlord hasn't increased the rent themselves. Perhaps because they see themselves as a good landlord. They're looking after the tenant. They're a good landlord. They've got a good tenant. They don't want to unnerve the tenant, and therefore, as other costs have gone up, the profit has decreased. Because if you think of it as a business, if the turnover stays the same, the rent, in other words, but your expenditure just keeps on going up. The interest rate goes up. Perhaps if a landlord's got an insurance policy and an insurance premium goes up, the um, perhaps the letting agent fee goes up, maintenance goes up. Obviously everything is a lot more expensive now than it was 1 year ago. But then if you look back 5 years ago, landlord's expenditure has gone up dramatically. And if the rent stays the same, then what happens to the profit? Well, it just goes down and down and down. So quite a lot of landlords perhaps aren't making, well, any profit. They might even be putting money into the business to actually sort of break even, which is just crazy. So quite a lot of landlords aren't making enough profit at the moment. So again, they're seeing this as an opportunity to cash out. Sorry, not to cash out. They're not making any money. Well, there won't be any cash to cash out. They'll just be selling their rental property. Let's be honest. Um, so that's why people are selling at the moment. Now there are different ways of doing this. So the traditional way, as I see it, is that a landlord will, let's say, serve notice on the tenant. So in England, it's 2 months' notice. In Wales, it's 6 months' notice. They'll serve notice on their tenant. And then when the property is empty, then they'll put it on the market. And there might be a bit of refurbishment costs there, maybe a bit of cleaning, maybe if the tenant's been there for many, many years, it might need a lick of paint or perhaps some new carpets, to get it ready to put on the sales market. They'll get the estate agent round, get the property valued, and then it goes on the market. Now, at the moment, the average time to sell a property from when it goes on the market until when a sale is agreed is around 2 months. It's about 60 days at the moment. Now, that's data from Rightmove. Um, and then when a sale is agreed, the average time for the deal to go through, in some cases, it's between 4.5 and 5 months. Again, this is all data from Rightmove. So from putting the property on the market until having the cash in the bank, it could take up to 7 months, which I think is absolutely crazy. Now, arguably, there is a two speed market out there. So if you've got a property that you put on the market and it's well overpriced, let's say it's worth £100,000 and you put it on the market, for 120,000 to test the water. Well, the reality is it's probably going to sit on the market for several months. It's then going to have to reduce in price, and then it's probably going to finally sell. But if you want to sell a property quickly, the best thing to do is to price it to entice. So price it to entice as many viewers as possible, to get competition, to get as many offers as possible, and then ultimately get the best price. So properties that are priced competitively tend to sell within a couple of weeks or so. So although the average is 60 days, if you price it right from the start, you'll generally sell it within a few weeks. If you don't price it right from the start, well, let's be honest, it could take several months. But this doesn't solve the problem, because if let's say you're a landlord and you've got a mortgage to pay, now the property's become empty and it takes on average 2 months to sell, and then let's call it 4 months for the sale to go through. Well, that's it. In that 6 month period, you aren't getting any rent in, but you're still paying your mortgage. You're now paying council tax, you're paying water, you're paying gas, you're paying for your electric, you're paying for your insurance. So if you think of this as a business, suddenly your expenditure's gone up a little bit more because you're paying for the services. So you pay for gas, electric and water and council tax, but your turnover, well, it's zero actually at the moment because you aren't getting any rent in. So landlords just need to bear in mind, when you're looking at exiting the market, you will have that period where literally you're just going to be eating into your reserves. So landlords just need to bear that in mind. Now, there is another option for landlords thinking of exiting the market right now, which I'm going to share with you. So this is selling the property with a tenant in situ. So let me explain how this works. So you would sell the property to another landlord who would basically take on the tenancy. And let's say it takes a couple of months for a sale to be agreed and then 4 months for the sale to go through. That's still a 6 month period. But during that time, because you're selling it to another landlord and you haven't had to serve notice on the tenant, then actually you're still getting the rent in. And if, let's say, it takes a little bit longer to sell, let's say it takes 3 or 4 months to sell, well, that doesn't matter because you're still getting your rent in every single month. So we, as letting agents at Cavendish, we actually offer this service where we almost see ourselves as matchmakers. So we have loads of investors on a database, and if we have a landlord that comes to us, perhaps it's one of our landlords who's a client of ours, or even if it's not a client of ours, and a landlord comes to us and says, can you help me sell my buy-to-let property? What we tend to do is we would say, let's try and find another landlord to take on the tenancy as a first option. Now, it doesn't always work because, let's say, if you're a landlord who hasn't increased the rent for, let's say, 5 years, and you've got a property that on the open market would probably get about £800 per calendar month. Now, if you're only getting £500 per calendar month because you haven't increased the rent in many years, well, if you think of that from a new investor's point of view, they're buying a buy-to-let property that's got a very low rental return. It's an underperforming investment at the moment. So those new investors, they're probably not going to give you the market value for that property. So there are two options here. If you really need to sell the property, quite a lot of landlords are accepting lower offers because they appreciate that they've got an underperforming asset, that actually it's almost as if the other investor is taking on your problem because you haven't been proactive, you haven't increased the rent, for whatever reason, and therefore they're inheriting your problem. Well, therefore, surely there should be a discount for that. It's a bit like, again, the way I always say it is, think of it as a business. If someone's buying a business that is not making any profit, it's not making any money whatsoever, then they're probably not going to pay top whack for it. Whereas if you're buying a business that's making loads of profit, it's a really healthy business, the compliance is all up to date, and tickety boo, then obviously that's worth a premium. Whereas if you're buying a business that isn't that great because the compliance isn't great and it's not making any money, well, you're probably not going to pay a lot of money for it. So the way I train landlords is to think of it as a business. Now, a small plug here for my book, The Landlord's Playbook. There's a lot of strategies in here which I've touched on today. And again, thinking like a business owner. It's very important that landlords, we have a business owner mindset. So I'll put a link in the notes below for the Amazon listing for this book. If anyone wants to get a copy, please do. It's called The Landlord's Playbook. So selling a property with a tenant in situ. So as I've just said, if the investment is not performing, then the likelihood is another landlord isn't going to pay top whack for it. However, if let's say at the moment we're flirting with the idea of selling it, but we have a consultation with, let's say, someone like me, and we realise that the buy-to-let property isn't performing the way it should be. Therefore, you can either sell it now and probably you won't get top whack for it, or you could look to optimize the property over the next, let's say, 1 or 2 years, get the rent up to where it should be, and then sell it to market value. Because if you've got a buy-to-let property where someone is paying the market value, the likelihood is another investor will pay a very good rate for it. So that could be another strategy to use to actually optimize the rent. So if anyone would like any information about this, we actually offer this service. So I will put some links in the show notes and below for our off-market selling service. Whether you're a buy-to-let investor looking to get into buy-to-let and you're listening to this, or maybe you're a landlord that's thinking of getting out, I'll put some links below where you can actually download some information on all of these services. And yeah, thank you for watching.